we're able to go to work for him in a big way and help get that $2 million tax liability down substantially. We're talking to under $1 million.
We've started off today's conversation talking about the importance of understanding taxation in retirement because it's one of the single biggest detriments to the wealth that you have accumulated. And success in retirement isn't about how much you have, it's about how much you get to keep. We want to help people keep more of their hard-earned money, right?
And listen, folks, if you have a pension, you're going to pay tax on the pension. If you have a 401k, you're going to pay tax on the 401k.
Yep.
If you get Social Security, which you should, right? You're going to pay taxes under Social Security. If you get TRS, you're going to pay taxes on that. Taxes, 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 taxes.
Yep.
I mean, it's such a big deal. And you know, Kristen, we talk about this on the show a lot, how a lot of financial advisors are out there and they're precluded by the companies they work for from giving tax advice.
Right. They're not allowed to engage in strategic tax planning for their clients.
Exactly,
yeah.
right? And so, you know, I'm not a CPA. I'm not, okay? But I know how to do Roth conversions. I know how to take money from certain buckets at certain times to mitigate long-term tax liability, all right? I know to help you calculate pretty closely the amount of money you're going to pay in taxes.
Right. Yep. Well, and I think it starts with the understanding that there is a problem, and so many folks are headed into retirement not knowing that they are facing this ticking tax time bomb. So let's share with our viewers this awesome resource you've created so that people can actually see what this looks like for yourself. There's a site we encourage you to visit. Again, this is a completely complimentary resource for you to utilize. onthemoneytaxplan.com. You can get there by visiting that web address, or you can click that QR code. And when you go there, you're going to be able to put in some basic information, including your name, the email address you'd like the report sent to, your age, and then how much money you have saved up in those tax-deferred accounts. You can also play around with the assumed tax liability, the assumed growth rate on that tax-deferred bucket of money. And then once you click submit, two things are going to happen. You're going to be able to see a side-by-side comparison, the difference between the government's tax plan for you if you do nothing versus how much less you could pay in tax if you enact some of these tax saving strategies that Ryan and the team of Allied Wealth are able to employ for their clients. And then you'll receive a 4-page report sent to you with the breakdown of your numbers. And once folks see that, they can't unsee it. It presents the problem.
If you get it and you don't see the problem, there's a problem, all right? We actually had a guy, this is a funny story. He saw the show on a Sunday, okay? We air the show like 15 times over the weekend.
Yes.
He saw it on a Sunday. He is calling the office Monday morning, demanding to see me. I want to see Ryan right away. And so, you know, he calls the office and somebody calls and asks for me. I'll usually call him back myself.
Right,
okay?
sure.
Call him back. I'm like, sir, what's going on?
Yeah.
Are you okay? He's like, man, I did it. I'm like, you did what?
What did you do?
I went to allthemoneytaxplan.com. I really did it. And I put in my numbers. And oh my God, I need to see you right away. Right? This guy, this is his exact report, okay? He's got $2.433 million.
Okay.
Okay, $2,433,000. He put in an assumed tax liability of 20%.
Okay.
Okay?
Yep.
And that's basically his effective rate, which is pretty fair. And then he did a modest growth rate on his account value of only 5%. So we're paying money, taking money out.
Right.
Paying tax at a rate of 20% effective tax rate, and the money's growing at 5%. All right. If he lives a 30-year retirement, he's age 60.
Okay.
Assume he dies at 90, 30
Right.
years. The amount of taxes he pays is over $2 million.
Wow.
Okay. Now think about this though. His current balance is $2.4 million.
Right. I'm sure people are scratching their heads going, how is that even possible?
I mean, it's mind-boggling. All right. And so because he called the show, all right, we're able to go to work for him in a big way and help get that $2 million tax liability down substantially. We're talking to under $1 million. All right. So because he called the show, we're potentially able to save this guy over $1 million. It's in taxes. Now here's what people don't understand. When the husband and wife team, right, we typically see statistically, and ladies, I'm sorry to tell you this, but you need to know, okay? The husband dies first.
Oh, yes. We're living on average 5 to 6 years longer. 80% of women die single.
It's exactly right. And by the way, the majority of this wealth in this country will be controlled by women in the next 20 to 30 years by a mile.
It's
okay.
so true. Yeah.
But here's what happens. When the husband dies, the wife has 1 year left to file as a joint filer, okay? Which means a year after the husband's gone, she has to move over to the single filer income brackets, which means you could have about half as much income and pay almost twice the tax.
Right.
They lose a Social Security check.
Right.
They're going to pay more tax on the income remaining. It is one of the most punitive things hidden in the tax code. We call it the stealth tax, by the way.
Yeah, we call it the widow's penalty too, right?
Widow's penalty is a good. I hadn't heard that one. That's good.
Yeah.
Kristen's good, by the way. She's really good. And that's true. It's the widow's. I'm going to borrow that, right? But that's really what it is. And it's sad that it's the case. But so many people we sit down and talk with about the tax planning stuff, they have no idea that happens.
Right.
They don't even think about it.
They're not prepared for it because they're not aware.
That's exactly right. And so if we can help mitigate what happens to the spouse, okay, as far as tax liability goes down the road, we can really save you a lot of money. But here's where it gets even worse. RMDs are called required mandatory distributions. The IRS knows how long you have left to live.
Yes.
And they make you divide your account balances by a certain number of years based on your age.
Every single year you have to do this.
Every single year.
Yep.
And it's 70, I think I did the math, at 75, it's about 4%. At 85, it's almost 7%. Okay? Now think about this. If the widow is 85, strong chance the husband's gone.
Right.
And she's having to pull out 7% out of a $3 million retirement account. It's a $210,000 tax liability on top of any Social Security income, any pension income, any investment account income outside of the IRA, okay?
Right.
She's going to be paying a substantial amount of taxes. Now, it gets worse because we had this thing called the Secure Act. Right?
Yep.
And it wasn't secure at all.
No.
In fact, we call it the Setting Americans Up for Taxation Act because that's what it is. So what happens now is when a son or daughter, okay, Jack and Aria in my case,
right,
if they inherit my IRA, they have to liquidate that account over 10 years.
Yes, because they eliminated what was known as the stretch IRA.
The stretch IRA is gone, okay? And what's interesting, Kristen, is we actually have people that are starting to experience this right now, okay? And they're going, wait a minute. My mom and dad unknowingly did this to me. They didn't know. And I know my mom and dad did not want the amount of money I'm paying in taxes to go to the IRS.
Right, they thought they were leaving a beautiful gift, right?
Exactly right. And now it's becoming a hardship. So, tax planning is such an important thing. And it's overlooked by so many companies out there. It really is a detriment. And then, the CPA industry, they really... there's supposed to be these people that plan around tax mitigation, and some of them do stuff for businesses and that sort of thing, but like personal income taxes in your golden years, they just don't. They miss the boat.
Well, can I share an analogy that I think is really fitting? I think that, it's been said that CPAs are more like archaeologists, right? They're looking at what happened last year. They're looking in the past, figuring out how they can help you save money this year on your taxes, right? What you and the team of Allied Wealth are doing is you are architects. You're looking ahead and you're able to build a tax plan for someone that's proactive, looking into the future to help people save as much as they possibly can, because we don't want you paying any more to the IRS than you're legally required to pay. I think a lot of folks feel like, oh, that's just the way it is. Taxes stink. I'm just going to have to pay them. But no, there's a lot of things you can do to lower that tax bill.
Kristen, there's so much you can do. And like, for instance, look at doing, when you're saving money for retirement, right? How about not saving all the money in the 401k?
Right.
Take advantage of the company match. That's free money, okay? But save some money outside the 401k. And we talk about diversification all the time.
Right.
Diversification has many flavors. One of those flavors is called tax diversification.
Yes.
Okay?
Yep.
So meaning, how much money do you have in tax invested retirement accounts? How much do you have in a Roth IRA? How much do you have outside of retirement accounts, right? If you have a balance of those, man, you're set.
Yeah.
But if you have all of your money in one of those tax invested retirement accounts, which so many people do, you need help. You need to get a plan together right now. And to get your plan right now, all you got to do is call 844-944-7555. If you want to pay less tax last year, or this year than you did last year, call us. 844-944-7555. We can help everybody, okay? But we help a lot of people save a lot of money in taxes. And you can get tax savings right now by calling us at 844-944-7555. Also, text the word plan. Yes, tax plan. Just the word plan will do, though.
Yep.
To 21,000. Again, pull out your phone right now. Go up there, little text box, right? 21,000. Yes, you can text to 21,000. Type in the word plan. That'll get to us. And there's a QR code that Kristen's really good at finding somewhere on the screen. You know what a QR code looks like. Pull out your iPhone right now, screenshot that QR code. That'll take you to get in touch with us as well.
Awesome, Ryan. Thank you so much. Yes, that QR code is right down there in the bottom right-hand corner of your screen, and we look forward to being able to connect with you. The reality is you don't have to settle for the government's tax plan for you. There are strategies that can be employed to help you reduce that potential tax bill for your retirement, so we encourage you to reach out today.